Hi guys, good afternoon. This is Abid Khan and you are watching Karachi's Academy YouTube channel. We were doing our IGCSE paper 2, variant 2, October November. So yesterday in our last two videos, we done with question number 1, A, B and C. So today we will do question number 2, right? So move on and see what the question is and what are the requirements. Let's move on. Right. Question number 2. Jabir owns an electrical wholesale business. Following the balances appeared in his book on 30th September 2021. So these are the balance of 30th September 2021. Inventory was 8,000. Purchases were 1,109,000. Trade payables 11,600. Revenue 1,60,000. Trade receivables 22,600. Operating expenses 32,500. So this is the requirement as on 30th of September 2021. The inventory on 1st October 2020 was 1,000. So you see, this is 30th September 2021 and this is 1st October 2022. It means this is your opening inventory and this is your closing inventory. Clear? So they are talking about full year information from 1st October 2020 till 30th September 2021. Now see what is all sales and purchases were on credit. Very carefully read the question. So all purchases and sales are on credit, right? Move on. Calculate the gross profit. Very simple. It is asking you to calculate gross profit and then profit. After that, you have to calculate gross profit and then you have to calculate. This is question A. Let's see what is in question. Question 2A. What is B? Calculate the gross margin. Okay. B. To advise Jabir on two actions he could take to improve his gross margin. Okay. This you have to give suggestion how he can improve his gross margin. And first we will see what is gross margin, right? And advise Jabir on improvement of gross margin. Calculate the trade receivable turnover. Okay, trade receivable turnover you have to calculate and round up answer to the next whole day. Very much clear. So what you have to do, you have to calculate receivable trade receivable turnover, and and then see Jabir wants to increase his credit sales and is considering allowing his credit customer an extra 14 days above his current trade receivable. Okay, this is another situation. So we will see and he advised Jabir whether he should allow 14 days credit and in E you have to calculate trade payable turnover, right? And in F he has given some proposal, so we will see what the proposal is. So first we will solve question number. First we will solve question A. You have to calculate the gross margin. How we can calculate the gross margin? Just hang on, right. So we will be checking. We will check this up with our marking scheme. First we will do ourselves, right? Then this is Jabir, right? And this is trading account. Trading account. Okay. Jabir Because gross profit, basically gross profit you calculate in trading account. This is category. And profit you calculate in income statement, P&L or income statement. Right? So Jabir trading account and for the year trading account for the year ended 30th September 2020. Right? Okay. You will see how we make it is very easy question of how much is the mark for question. I think it is 2 number questions question. We can easily solve this. Opening inventory purchase, very normal. Your revenue is 1,60,000. You are done with 1,60,000. Okay, less cost of sales or cost of goods sold, whatever you say, COGS or cost of sales. How you will calculate? You got the opening inventory. Opening inventory is your opening inventory is 11,000. Okay, your purchases are 109,000. Okay, is there any return, purchase return? No. Is there any transportation in? No. Then this is total 1,20,000. Right? These are your, if we add this to 11 plus 109 is 11 plus 109 is very much 1,000. So we have done with this two information. Okay. So 8,000, 109,000, right? And this is your variable. Then simply you have to less closing inventory. Less closing. How much is your closing inventory? Your closing inventory. This is your closing inventory. 8,000. We have done with this 11,000 done, 8,000 done. If we deduct 120 out of then 112,000 will be your. So your gross profit, your gross profit will be 160 minus 112. This is 48,000. So your gross profit is 48,000. You have done with this, right? And if you want purchases we have taken, we have done with this trade receivables will report. Okay, then this is your gross profit. If your operating expenses are 35,200, these are your operating expenses. Deduct them. Operating expenses are 35,200 into 48,000 and minus 35,200. So your profit would come as 12,800. So this was a very simple requirement. So gross profit and net profit we have to calculate. So we have done with this. Move on to the other requirement. What is other requirement? Calculate gross margin. What is gross margin? Gross margin is nothing. It is gross profit percentage to sales. This was your A. We have done with A, right? This is done. B. Question B. Gross margin. What is gross margin? Gross margin is basically your gross profit over to sales into 100. This is the formula. Very, very simple. What is your gross profit? Your gross profit is equal to 8,000. Your sales are 160,000, right? And 100. Okay, we can see what is the gross margin percentage. 48,000 and divided by 160,000. So this will be 30%. This is 30%, right? Your gross margin percentage is 30%. We have done with this B. Now move on to what is requirement of. So we have done with this B. C. Advise Abel on two actions he could take to improve his gross margin. Actually, if he wants to increase his gross margin, very very simple. Either he has to increase his sales price, that can increase his gross margin, or if he is giving some kind of discounts, trade discounts, and that is reducing his net sales, that is ultimately reducing his gross profit. So what he has to do, he has to reduce his discounts. Then his sales price will, net sales will get increased. So margin, ultimately his margin will improve, right? Otherwise, other things are that he, or either he has to um, do something to increase sales, increase revenue. He has to, how he can improve his gross profit, the gross margin or gross margin. He has to improve his sales revenue, and the reason is, the way is he has to increase his prices, or if he is giving some extra discount that he should reduce, then this is the one way. Number two is reduction, cost reduction. Number one is increasing revenue. Second one is cost reduction. How he will reduce his cost? It is buying raw materials, purchase materials, whatever he is buying. So he should see the alternate supplier who can give the cheaper material, same quality material, but at the competitive rates, reduced rates, right? Or if he can ask existing supplier to give some discounts, so increase his discount. Let's see what actually the marketing scheme is saying. So we can. This was it was B2. So B2, what marketing scheme is suggesting us. This is B2. Increase sale price or reduce trade discount. This is what I have explained you. This is what I have explained you, right? So this I already explained you. Obtain cheaper supplies, obtain higher trade discount from suppliers. The same, okay. Purchase lower quality goods. He's saying purchase lower quality goods, but I don't think that this you cannot survive, because this is a this market is very quality conscious, so he cannot do this. To purchase lower quality, so this is not workable. He has given an option is there, but practically this is not possible. Change proportion of different types of the goods sold. Public sell more goods with higher profits. Yes, this is something that I can know. If you are selling A, B, C, and your contribution margin or gross margin, you are getting some, I think say 20, here 15, here 35. So where you are getting more margin, on 35 you are getting more margin. Then you should change your sales mix. This is called sales mix. Say you have to increase the quantity of C, and reduce the other quantity, like A is earning only 20. So you should reduce its quantities and increase quantities of C. If in case the market is accepting your product C, so that is also practically you have to see. But another reason, the reason could be the option could be he can increase his. Move on to next question. You have to calculate the trade receivable turnover. So trade receivable turnover, how we calculate the trade receivable turnover? Trade receivable turnover is to the, you know, I'll be calculating here B and C, this trade receivable turnover. How we calculate this? We divide 365 by uh, by sales to your receivable, trade receivable, right? Trade sales to your trade receivables. So 365 divided by how much is your sales? Your sales is 160,000. Your are trade receivables are 22,600, right? 365 by, we can see 160 divided by 22,600. It is coming, I will keep this into memory, right? 7.0, 7.079. So how, just you have to divide 365 divided by, memory recall, this is 51.55, and he has told you that round it off to the whole day. So we can say 52 days. This is okay. Question number D, we can see what is required in question in C. They are asking you to provide trade table. Okay, you can go and see what is D is advised level and is 14 days. Calculate receivable turnover. D, we will discuss through the marketing scheme. In E, he is saying to calculate trade credit turnover. So how do we calculate the trade credit turnover? So just a minute. Let's see. Trade payable turnover. How we calculate formula is same. 365 divided by purchase is sales, purchase is average sales. Purchase divided by trade paid, right? This is 365. Purchases, how much purchases we have? Purchase 109,000. Purchases are 109,000. And trade payable, how much we have? Trade payables we have 11,600. 11,000. So 365 divided by this much. First we will do this 109,000 divided by 11,600. This is 3.9.93. I am considering old memory, putting this into memory. Okay. Then this is 9.396. Right. So I am dividing 365 by 9.39. The result is 38.84. So 38.84 days, right? Means this is 39 days. See what is the answer in our marking scheme. What? How much? 52 days. These are your receivable turnover days, and these are your 39 days. What is option B? What he was saying, what is given in, what is was required in B? Let's see. He's asking advice Jabir whether he should allow his credit customer an extra 14 days. You see, if you give more days to your customer, so normally it is very common sense. His trade receivable turnover, justify your answer. So his current trade receivable turnover, his current trade receivable turnover is 52 days. So he's saying he will be giving you more 14 days. Please allow the customer. So you are giving more time. Already you are very high side because you 52 days is a very high. Normally sales remain outstanding for 30 days. Hardly 40 days. You are already. So if you give more 14 days, what will happen? So your more money will stuck into the receivables, right? There will be more, you see, the chances of bad debts, right? And these are the two things. But we can see what the marking scheme is saying. We can look into this. Marking scheme is saying to the he's saying the advantages and disadvantages. Sales will increase. This is for sure. For 14 days, you are giving more, then sales will increase. May attract the more customers. This is right. Profit may increase. Yes, of course, your sales will increase. Ultimately, your profit will increase. May improve relationship with the customer. Right. You are giving more days, so ultimately there will be good relationship with your customer. Right. But what will be the disadvantages that I have explained to you? Delays the receipts of the money. Ultimately, you are getting 50, after 52 days, you will be getting more 14 days to get your money back. Additional working capital would be required because when your money is stuck in receivables, you will be needing money to run your operation, right? So you will be needing money. So ultimately, you will going to the bank and you will have to have some help. We increase irrecoverable debts, as I explained you, and maybe increase the administration cost. So this is answer B, and in E, what he has asked in E, what is the requirement of E, and E was E we have already done. It was trade payable. Advise Jabir whether he should increase his current monthly purchase by 20% or more additional trade discount. You see, this is again, I will say that this is not a good option because if you buy more, if there is no sales requirement, you will be just to obtain a better discount. You will be accumulating a lot of inventories. If there is no sales, there will be a lot of inventories, right? And a very bigger amount of this of discount you will be getting. But there will be a risk of high inventory, and if that is not produced and sold, there will be a risk of high expiry. If materials have a means a short expiry materials, so there will be a greater loss. This is one thing. Let's see what the marking scheme is saying. 2E, 2F. By when you will be getting a discount, the cost of production will get reduced. Okay, this is fine. If goods can be sold to the gross profit will increase. Yes, okay. If goods can be sold, the gross profit will increase, right? Again, this is what I said. If you are getting more material or purchases, so there should be a market to sell them. So this is giving this condition. May reduce selling price to increase. Yeah, this is one thing. When you will get a discount on your purchases, you can pass on that discount to your customer. So that will increase your sales. So it could increase a range of product to sale. Like you can because material is cheaper. So because of the discount, then you can means introduce more product, right? But what considering if the additional goods can be sold, increase quantity, value of inventory, increase in quantity and value of inventory. What I said, your inventory will increase. Increase cost of storage. Yeah, this I did not mention, but exactly when you will be having more inventories, your storage cost will increase. If you are putting and storing your materials in a rented premises or in a third party like DHL or something, so then your cost of storage will get increased. Additional working capital will require. Yes, your huge amount will stuck into the stock. Your money will stuck in stock. So for the running of the business and running of your current liabilities, you will be needing money. So this is one thing. Increase in amount payable to supplier and each month. Yeah, this is also the same thing. Guys, we have done with our question number two, and I hope you have enjoyed this lecture, and this lecture has clarified a lot of your misconceptions or doubts about question number two. If you have enjoyed, please like it and share it with other students so that they should also get benefited, and also subscribe our channel so that you get every updated video on past papers. Thank you very much. Bye for now. See you in next video with question number 3 of the same paper. Thank you very much.